I think with the U.S. and China, the U.S. is asking China to change. China was a lesser developed country. It had GDP per capita 40 years ago of a few $100s a person. It's now $10,000 a person. It's the greatest economic miracle, perhaps in world history, for a large country over a 40-year period. But part of how they did that was staying behind big tariff walls, taxes, closed markets or selectively open markets, government subsidies, seizing intellectual capital, a variety of things we don't do in the West, in the developed world. And so now China's big, and the U.S. And actually the developed world is asking China to change. You can imagine that some people think it's great to change if you're in China, but most people like what they're doing. And so this is a real process where we haven't made any progress really in 70 years. And so the U.S. has sort of called it now and said we want change. And there are many in China who say that's okay, but there are others who don't want to change. So we have three parties at the table. We have the U.S., and we have the Chinese reformers, and we have the Chinese hardliners. So we're going to find out this week what the Chinese positions are, and then the U.S. will have a chance to take a look at it. We were very close to a deal in May, and then China pulled back and eliminated about a third of the agreement that was already had a handshake. There were still other issues that had to be resolved, but that led to the collapse of those talks. Now China is coming back to the table, and we'll see what they put on the table.
Reports are that they're coming back to the table and they've taken a big item off, industrial subsidies. Can there be a deal without industrial subsidies included?
It depends what's on the table, and we don't know. And so this is very important. The fact that they've come back, and I think what they recognize that what's going on is a decoupling of the U.S. economy from the Chinese economy. To give the viewers some concept, depending upon how you do the numbers, the U.S. and China together are between 35 and 40% of the world's economy. This is massive. So when the grown-ups are having a dispute, all the children feel it. And the world's slowing down in part because of these difficulties between the two countries. Manufacturing is really in recession globally as a result of this. Manufacturing is where you see trade. And so it's quite important for both countries, as well as for the emerging markets, because they sell to China, and for Europe, who sells a lot in export. So if we don't get this right, it has a big impact on the world, not just on the U.S. and China.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.